Hello and welcome. You are listening to the Investor Lab, the auditory epicenter for passionate people seeking a life of freedom, choice, and abundance. And on today's show, we talked to a guy who did that. He achieved a life of freedom, choice, and abundance, and he did it in record time. We speak today with Daniel Kramarzewski, who is a Dashdot client. He's such a great guy with a great energy. We talked about his journey through property before, all of the stuff that he'd done. But what I find most interesting about this story, this journey, is that we helped him to achieve his 6-year goal in 14 months, which sounds absolutely too good to be true. So if you are interested to understand how that happened, then listen to this episode because it's great. And there's so many good gold nuggets in this episode and good lessons and good learnings. Every time I catch up with Daniel, I really thoroughly enjoy it. And I reckon this is one of the best podcasts that I have recorded for you guys in quite some time. I really thoroughly enjoyed this and I'm confident that you guys are going to enjoy it too. So without any further ado, if you like this episode, once you've listened to it, make sure you share, rate, review, send it to a friend, family member, friend or loved one. But let me stop waffling. Let's get stuck into it. I'll see you on the inside. Hey guys, welcome back to the Investor Lab. Joining me on today's show is I'm going to call you a serial entrepreneur. I don't know how you feel about that, but we've got an entrepreneurial property investor by the name of Daniel Kramarzewski. Daniel, how are you?
Good. I'm very good. Thanks for having me.
Mate, it's a real pleasure. So I've had the pleasure of getting to know you over the last couple of years as we've been helping you to build your property portfolio. I still actually distinctly remember the very first conversation we had on the phone. I literally remember exactly where I was walking and exactly where I was going. I remember the whole thing. So it's been really awesome to get to know you over the last couple of years and to help you on that journey. But nobody else has had that opportunity to get to know you a little bit better. So why don't you give us a little bit of a background? Tell us who are you? What do you do? Tell us a little bit about you.
Oh, fantastic. Yeah, excellent. Well, so I'm 46 years old, married. I have an 8-year-old. Career-wise, I guess I've been working for 30 years. I can sort of break that down to 3 10-year blocks. So start off 10 years McDonald's. So I pretty much went through the stores and ended up in their marketing department. Mm-hmm. The next 10 years I spent in cafes and real estate. So owning cafes and then also owning a real estate office. And then these last 10 years I've been working sort of in the real estate industry, but in smoke alarm compliance. So testing smoke alarms in residential rental properties. So that's really my career broken down into 3 sort of distinct areas, I guess.
Nice. Correct me if I'm wrong, but didn't you have like a fashion business or something at some point?
Yeah, that's true, actually. Yeah, so my wife runs a clothing retail store, which we've had for about 15 years. I bought it when I was in real estate as a business broker. It's a business that came across that I was asked to sell and I ended up buying it. So we've had that for about 15 years.
Yeah, nice. And whereabouts did you grow up?
Southwest Sydney, so an area called Revesby, so somewhere between sort of Bankstown and Liverpool.
Yeah. Nice. And you said you owned a real estate office, right? So just to clarify what that means, real estate agency, right? Selling properties, yes. Property management.
Absolutely.
Stuff like that. That's really interesting. How old were you did you start working at that business or did you buy that business or did you start that business from scratch?
Yeah, it's a good question. So when I was in cafes and the location where my cafe was that I owned, I was surrounded by real estate agents. And a lot of my customers are real estate agents they'd come in and bring their clients in for coffee. And I used to always joke around and whatever with them and say, oh, look, I've got a best position right on the corner. One day I'm going to open a real estate office right amongst you. And then long story short, the opportunity came up and I decided to close down the cafe that I had and open up a real estate office. And it was a franchise business. And I did that for about sort of 4 or 5 years between sort of 2001 to 2005 and 6, right when the market was everything that I sold for less than they bought it for. So it was a really tough time to be selling property. You know, someone bought a house for $400,000 and you're telling them the best you can get now in this market's $350,000.
Hang on, what years were they?
I'm guessing sort of 2001 to 2005, 6, somewhere around that period there.
So 01 to 06, I'm not going to pin you down to that. I'm just generalized. And where was that? Where was that office?
The office was in Padstow, so Southwest Sydney once again.
So that's really interesting. You know what? There's a few things that are really interesting about that. So number one is that during that period of time in the early 2000s, broadly speaking, real estate was booming.
Yeah, I mean, one would hope, and certain areas are just like that. I think the market was just cooling off people who had bought at the high, and then this situations changed, divorces, marriages, whatever was going on in their lives, and they had to exit that property. And, you go on there and tell them the sad news that, hey, it's not worth what you bought it for. And people, we have such a buoyant real estate market. They always felt that that's just not the case. Everything you buy is just going to continue to go up.
Yeah.
It's all about timing. I mean, that's the market, right?
Yeah, it's so fascinating, right? And so, because you're right, a lot of people think that you just buy property and it goes up, right? You just buy property and it goes up. And particularly, I think people think that in Sydney, if it's in Greater Sydney, you buy property and it goes up.
Yeah.
I think people forget that properties in Sydney also go down they go down. They either go flat or slightly down, or pretty much everywhere. It happens everywhere.
Yeah.
But people, I think, particularly don't realize that in Sydney.
Yeah.
So, yeah, because during that period of time, there was huge parts of the country that were that was like one of the biggest boom periods we had was 01 to 06 for many parts of the country. So that's really fascinating. And you opened up a real estate office at a time where your local market was doing the opposite.
Unbelievable.
How did that go? Why did you stop doing it? Was it just because you were like, after 5 years or whatever, you were sick of trying to tell people that you're giving them the bad news, or what was the story? A
little bit, but I just didn't love the job, to be honest. What I found is that, it's it's an occupation where it's all about reputation, and the information you're dealing with, the agent always passing on information between the vendor and the buyer, and the vendors tend to hide things from you. Even though you're on their side working for them, you ask them, look, is there any problems with the property, anything I should know so I can get ahead of it in case it comes out in a building a pest inspection? I'd like to get ahead with the buyer. And they would just hide things from you, previous termite damage, that's, any sort of issues or maintenance they had. Then you'd finally get someone over the line in a tough market. The pest and building would come out and they'd discover this. You go back to the vendor and they're like, oh, I didn't think you'd notice, or they'd find out. So you go to the buyer and you try to explain to them, and they're like, real estate agents are all liars. And you're really stuck in the middle with, really limited control over the outcomes. And I just felt that to be really like a frustrating position.
Yeah, that's really interesting. What was your motivation to actually start doing that? Like because what you touched on there is really interesting. Because of situations outside of your control, you were forced to be in a position where people would basically say, you're just another one of those untrustworthy real estate agents, right? Real estate doesn't have a great reputation, right? It does not have a great reputation.
Yeah.
What actually motivated you to want to go into that side of it? It's very interesting.
Yeah, look, I liked it. I like the there's some prestige on the outside of it. I'm in a cafe pulling coffees, wearing a black T-shirt like I am today. And everyone's walking in with, shiny shoes, a fancy suit, and a $10,000 watch. And I'm thinking, what am I doing? I should be doing that as well. So that part of it looks exciting. But the reason I got out was probably the exact opposite, where I might be a little bit thin-skinned in some areas. I remember distinctly the time that I decided I wanted to get out of real estate. And that was, I was on a driveway and I was doing a second inspection for a home. And usually during second inspection, I'd tend to stay out of the house and I'd let the potential buyer walk in by themselves, because that's the time they're thinking about, where do I put my furniture? Will our dining room table fit here? That sort of thing. So you let them get emotionally attached on that second inspection.
Yep. And
when I was outside on the driveway, the buyer was holding they had like a 9-month-old son, and I was sort of saying, hello, how are you going? And because he was a similar age to my nephew, and he wasn't smiling. And I remember the buyer saying to me, don't trust him, he's a real estate agent. And it broke me, Goose.
Yeah, no, I wouldn't be able to handle that.
It's crazy, right? That's a bit thin-skinned of me. But then I realized,
I don't know if that is thin-skinned. Like if you like, if you take pride in your integrity and stuff, I wouldn't want to wear that badge either.
So yeah, and that was this. I decided then, you know what, I want to have kids in the future as well. At that time, I'm like, this is not going to be for me. I don't want that reputation, because I was really trying to do the right thing. That's what I felt, honestly.
Yeah, interesting. So okay, so when we met over the phone, albeit I haven't never actually met in person, it's the closest we've ever gotten, I think. So you already had a few properties, right?
Yes.
So you had already been an investor. You had been in real estate in the literal sense.
Yes.
When did you first start getting interested in real estate?
Yeah, probably just when, while I was working at McDonald's and stuff, I just, I was working with someone at the time who was starting to buy a little bit of real estate. And he was sort of saying to me, what are you doing buying cars and all this sort of stuff? You work hard, you're doing long hours, you don't really have anything to show for it. And at the time, I remember saying to myself, like I was saying to him, look, around where I live, I just couldn't afford to buy. And he's like, So don't buy where you live. Like buy further away from where you live, you know? So you work out what your budget is and work backwards. Just keep driving sort of west until you can find somewhere you can afford to buy. So, I mean, that's in essence what I did, you know?
So that was the investment thesis. Keep driving until you found something you could buy.
That's right. Yeah, eventually you'll find somewhere you can afford to live.
Awesome. And so how old were you when you bought your first investment property?
I believe I was 20.
That's pretty good going.
Yeah.
Not a lot of 20-year-olds. You know, when I was 20, I wasn't thinking about property. I can tell you that much.
You know, prices are a bit different back then, Gus, as you'd imagine.
Yeah, totally. Yeah. It's somewhat relative. I was going to say it's relative, but it wasn't exactly relative. Yeah, but no, it makes sense. So, okay. So tell me a little bit about before we met and before we started working together, what was your investment thesis? Tell me a little bit about your portfolio. What worked? What didn't? Did you have any kind of like, I mean, obviously you were sort of going it alone into the great big wide world of property investing. I'm interested to know how that went and any challenges you might have faced.
Okay. So I started when I bought that first property. So I bought a first property and it was in Campbelltown, southwest Sydney, sort of down the highway, 30, 40 minutes from where I am today.
Mm-hmm.
I bought that property. I went back, I bought it and it wasn't really difficult. I didn't need a lot of money to get into it. And it was positively geared. And at that time, everything was sort of all the media, everyone you spoke to, negative geared. So I'm there and people around me saying, this is crazy, you're going to pay tax in this sort of scenario and it's just forced savings, it'll never go up in value, that sort of talk. So I went back to, after the deal was done, the bank manager that I borrowed money from rang me and said, hey, come back and just have a chat about how the experience went. And this had been about 6 months. And I told him what had happened. Here's what we paid. Here's the rent. And he said to me, I could lend you money again, you know, and probably more than I lent you last time. I was like, well, how does that work? He's like, well, in essence, your income's gone up because, you know, it's positive geared property. So I'm like, okay. So we got pre-approved and I bought again within 6 months. And then I did again about another, I think just less than a year later. So 3 very quickly back to back. And then it was at that time where I had sort of risen above everyone in my circle. And this is a conversation you and I had early days. You're like, you bought property, you're a real estate agent, you seem to have some business acumen. Why are you talking to me for? And I sort of said to you, I got to a position before where I had some properties and probably my circle wasn't good enough. And what I was looking for when I joined you on the Dashdot team really was about mentorship, was about when I get to a point in my portfolio again, because that's where I want to go, and I get the wobbles a little bit, get the shakes because I'm not really confident. I need someone to remind me, hey, what you're doing is really normal, and I need to be the small guy in the room so that I can get elevated again. And someone says, no, remember the plan we had? Now's the time we push through. We don't get comfortable, we don't get complacent. We really need to push through. So that's probably really the time when. So I went through that. I exited all that properties. I went through a divorce a few years later. So, I mean, as they say, love is grand and divorce is 500 grand. So, which I found out the hard way. So that's why I really went through a stage where I just sort of exited everything, spent a few years overseas. And then when I came back and wanted to get serious again, now I'm sort of early 40s in a new marriage and really want to reestablish myself. And this time I thought, if I'm going to do it properly, I need to do it with a team.
Yeah, nice. Yeah, I love that. I love the way that you phrase that around like sort of getting the wobbles and all of that kind of stuff, because I think that's actually where a lot of people go wrong. A lot of people might get into it and maybe get one, statistically speaking, 1 or 2. Most people don't get past there. And then they either just get distracted by life, happens.
Sure.
Or they get the wobbles and they're like, oh, I don't know what to do next. And so they never get there, you know, statistically speaking, you probably need about 5 properties in order to be able to achieve the goals that you want.
Yeah, absolutely.
And most people get stuck at 2. So they just, you know, and so, yeah, the way I kind of think about how we fit into the journey, aside from like, you know, all of the actual getting the properties and is actually the kind of almost like a personal trainer, you know, to go, hey, no, it's cool. You can do it. Like just go to the next step. You're going to get there. So that's awesome, man. That's great. So tell me then, so when we started working together, you still had the properties then, didn't you?
No, I had some different properties at the time. So you gave me a really good ego check here. You said like, how many properties do you have? And I'm like 3. And you're like, talk me through it. And I'm like, I've got a house, brand new flat. And you're like, that's 1. And I've got a unit. And you're like, that's 2. I'm like, okay. And you asked me sort of, so what's the yield on these properties? Now, I should know what the yield is, right? Ex-real estate agent. I didn't know the yield, didn't even know how to calculate it, because in real estate at the time when I was in real estate, people didn't talk yield. Everything was just a good investment. And the only time we talked yield was really in commercial terms when we talked about commercial property and returns, because that was really when the numbers were important. But selling residential was just emotional. You know what I mean? Talking about the upside, the potential, not really talking about yields in terms of numbers, hard numbers. So I like the really cold, hard statistical approach you took with me, and that you checked my ego.
Yeah, nice. No, that's good. That's good. And do you still have those? Do you still have those two properties, the apartment and the house with the granny flat?
Actually, I exited the apartment, and that was sort of based on your advice. I said to you, look, tenants have moved out. I'm having a bit of a situation. Probably needs a freshen up. I think I should probably renovate it and try to just sort of maximize it. And you said to me, Daniel, has it served this purpose? And I'm like, yeah. And you're like, so let it go. You need to move on. So I did end up renovating it because that's the type of guy I am. I don't always take advice. So
yeah, I'm the same, by the way. I'll listen to the advice and then I'll choose whether I take it. So that's fair.
So I did a renovation, put it back for rent, and I'll give some numbers on this as well. So I spent, I sort of did bathroom, kitchen, floors and stuff like that, really freshened up. When I put it back for rent, this was really early COVID when a lot of people had exited the country. And it was in Mortdale in sort of South Sydney. And there was 226 empty 2-bedroom units on the market when I went to market for that. So there was just no potential to rent this property. So the property at the time was a pre-renovation. It was renting for about $420. Now I was looking at $350 and it was vacant for a month. So then I thought, you know what, now's the time to exit. So I sold it for $620,000, which was because it just presented really well. And there was nothing for sale in the area. Everything was for rent. So God knows why someone thought that was great to buy as an investment. But that was when I took the money from that and rolled into the second purchase with you guys. And this was on the back of the first purchase we did together, which we'll probably get into. I gave you a comment. I said, look, this is a bit vanilla for me, Goose. And you're like, I'm going to find something spicy for you.
Yeah, totally. So before we get to that, because I do want to dig into those, because I'd love to get your reflection on the portfolio that we've helped you build now. Yeah. But before that, when we decided to get started together, do you remember what your goal was? Remember the goal that we set out
to? Absolutely. So I started off like most people are, and I said to you, I said 50 to 100,000 in free cash flow by the time I'm 50. And I was at 44 at that time. So 6 years, 50 to 100,000. You're like, so what is it, man? 50 or 100? Because these are two different paths. So I said, 75. Let's just draw a line in the middle. You're like, okay, that's cool. We can do that because we can do 100, we can do 50, we can do 75, but all of these journeys are going to look a little bit different. So what do you want to do? So just be on the conservative side, because I thought, I wasn't totally convinced at that time. So I wasn't drinking from the Kool-Aid yet.
Awesome. Okay. So we settled on 75K. Yeah. That was the target. Yep. Awesome. Sweet. And so I'd love your reflection on, let's have a chat about some of the properties that we've bought for you over the last, because we've helped you buy in the last 18 months, helped you buy 4 properties.
Yeah. We did 4 in 13, basically. Yeah.
4 in 13. There you go. Yeah. That's a better correction. 4 in 13. Nice. I can tell you're a little bit, you're got a bit of a competitive edge there because you didn't want to let that go. You're like, no, 4 in 13, mate.
Hey, it's ego metrics. You can slap me down. It's okay.
No, it's good. It's good. It's good to be self-competitive. It's all right. So let's talk about that then. What was the first property we bought for you? What was that like? Okay.
December 2020 in Armidale in Western Australia, 242,000 and it's renting at $350 a week. So 7.52 yield.
Nice. How do you feel about that?
I like it. That's the one I said to you, look, it's a bit vanilla. It had sort of, you can put a granny flat on it. And I did look at doing that, got a quote on that to see if that was a time. And then you sort of said to me, look, that's later. Let's do a granny flat, but let's use the equity from that property to build its own granny flat. Don't put cash into that. Now's a land grab time. Use any cash to continue to sort of grow your footprint.
Yeah. Yeah. And that property as well is also, since we bought it's grown by nearly 30%. It's grown by 27.3% as well, which is pretty good. Yeah. That was a really interesting one because I did some reflection on that property a little while ago, and we bought literally right at the bottom of the dip, perfectly timed at the bottom of the dip. Nice. So that property there has given you an 89.5% return on invested capital so far, which is pretty good going. Okay, so we go to that property in Armidale, and even though it had granny flat potential, that wasn't spicy enough for you. So tell us, what do we do next?
So next we went to, and this is the one that we rolled the money out of the unit into this one. So the unit I sold for $620, and then we went to Bundaberg and we bought a 3-pack for $635. So essentially the same mortgage. Now this property here, big square meterage, I think around 1,000 square meters, an existing house at the front and a duplex in the back. So two-year-old duplex at the back. Yeah, so that was a really good, that was spicy enough for me. That was a real good, when you look at that, I went to the Mortdale unit, 2-bedroom unit at $350 potentially a week rent. We flip over here and that Bundaberg property, same sort of mortgage size, and it was about $935 rent a week. So just, nearly 3x returns.
Yeah, totally. And that's just on the yield front, not to mention the growth. That area, like the whole Bundaberg area, has been cranking along. We can't even buy there anymore. Yeah. So that's interesting, right? So, because so both of those got pretty good yields. First two property, 7.5, and then I think the next one was about 7.7, I think, across the board. How did that change your mindset around what could be done in terms of yields and stuff? Because prior to that, you wouldn't have been getting those kind of numbers.
Yeah, absolutely. So I started to be yield focused, and then you start comparing because, naturally people, they buy where they live because they understand the market, they feel comfortable, they can drive past it. So when I start looking at local numbers, I'm like, nothing's exciting where I live. Capital growth wise, yes, but not from a yield perspective. And that's really what we're talking about really is growing a cash flow base to, replace income and then give you more sort of freedom and choice. So, I started to, that's when I was like, okay, I'm in, let's go, let's do this.
Yeah, that was because I remember after that first one, like, yeah, it's a bit vanilla. And I'm like, well, you can put a granny flat on it, dude. That was the thing that you wanted, but that's fine. You're like, all right, spicy, right? Let's go. And I remember after that one, that was when you were like, that was like an aha moment. It was okay, let's go, let's lean in, let's get over the skis a little bit. So what happened next?
Next, we went to Townsville. This one I did self-managed super fund. Didn't have a lot of money in my super fund because I was self-employed for quite a long period of my sort of working career. But we went to Townsville and did a duplex, which was great. $392, two-bedroom duplexes returning $590 a week, $600 a week. Sort of, they're a little bit under market still, but we have potential to move those rents up. So this was, it hasn't been that long since we bought these properties. So.
Yeah, totally. Yeah, they're still relatively fresh because we did buy 4 in 13 months.
Yes.
And then pretty quickly after that one, like it was only a couple of months after, wasn't it, that we ended up buying the fourth one? What was that?
Correct. Yes, that's right. So that one there, we went to Rockhampton for the next one. So this one here, we bought a 4-pack in Rockhampton. So this is like, this is a really good one, man, to be honest. So big piece of land, 2 sets of 2 duplexes, all 2-bedders. So 4 times 2-bedroom duplex. And this one here, it's straight off the bat, it's a really good yield at 9.5%, but that'll just go through I think it's about 7.5. It'll go to 9.5, 10% easily because we had some really long-term tenants there. One of the people have been there for 18 years. So they're quite a bit under market rent, but really good property for a cash flow point of view.
Hectic. Yeah. So that's a screamer. So just to make sure that people listening understand that. So that is 2 duplexes on 1 block, right? Yeah. And when we get it up to market rent, it's going to be about 9.5% yield.
Yeah, absolutely. Absolutely.
So I remember getting a phone call from you not that long ago where you basically said, hey, Goose, you basically reached out to me and said, hey, Goose, can we have a quick chat? I said, yeah, of course, man. No worries. And he said, well, what do we do now? I said, what do you mean? I said, well, we've kind of hit the goal. Like, what do we do now? Do you want to talk about that for a minute? Like, what was that realization like?
Yeah, I remember the call. So, we talked about sort of, a 5 to 6 year goal. And then 13 months later, 40 months later, we're there. And I'm like, okay, wow, like things sort of moved forward and we got there. So I'm like, well, what next? And, you're sort of said, well, we can keep doing more of the same, or we can really start to change direction, have a look at it, because we got to the foundation, we got to where you want it to go. So let's look at where to from here. And I guess that really brings us to today's conversation. That's where we are.
Yeah, totally. That's really interesting. I want to dig into that a little bit more though, because you had a 6-year goal and you achieved it in 14 months.
Yes, absolutely.
How did that feel?
Yeah, it's good. Like these are real breakthrough moments. And I think, just personality type for me, like I lean into things. If like once I believe, and I'm a believer and I'm drinking from the Kool-Aid, I lean in and I go quite hard. So, and that's where people around me, like, you need to slow down a little bit, and you really got to be conscious of the people you surround yourself with in these situations. And that's the important part. That's the real value out of having like a Dashdot in your team, is because I know that's going to happen. I know I'm going to get there. And I know at that point, people around me aren't going to be, they're not going to move at the same speed or velocity. And I need to make sure I have someone around me that says, hey, this is what, let's go back to our conversation. Here's where we're going to be, and here's what the next steps look like.
So a lot of people, one of the challenges that we face is that a lot of people think that, if I was to go and tell someone out in the street or in the ether of the internet, we helped the guy achieve his financial goals in 13 months or 14 months, whatever it was, they'd basically call bullshit, basically.
Yeah,
right? They'd say, and that's actually one of the challenges we face, because so many people, they just think we're making it up. Yeah. So what would you say to someone on the outside looking in, going, oh, I don't know, this sounds too good to be true?
Yeah, I get it. I have these conversations all the time, and I think people fall into like sort of three camps. They ask me, what are you doing? And I explain what I'm doing. And the first part is that they like what you're doing, and they're like, give me these people's number, let me get involved. And that's the small part. The second part is, I like what you're doing, but they don't actually believe they can do it. And they earn the same money as you, live in the same area as you, travel in the same circles, but they don't believe they can do it and do nothing about it. And the third part is people who just look at it and then, they sort of don't like the idea. They shit on it a little bit. They look at it and say, this is regional areas, they never grow. You just buy one good property in whatever area. So they don't subscribe to it, and they just want to put it down. So that's sort of where I find that just through my conversations, they sort of fall into those three camps.
Yeah, so that's really interesting. Why do you think people have that mindset? Because I think when people shut ideas out, it's usually because they're scared, I think, right? Yeah. So what do you think? What do you think is like, I'd love to dig into that. What is your view on that kind of like whole kind of mindset piece around that?
Well, I mean, statistically speaking, it's something you quote all the time about, 90-something% only own a property plus an investment property, like one investment property. And I think that's really the thing. Most people don't know people who do what you do, or what we, people like myself do on that level. They just don't know. And I guess if they had 2 or 3 of me around them doing the same thing, that they'd believe it and see that it can be done, and they would subscribe to it. But just in their circles, in their little world that they live in, that bubble, they just don't experience it. So they just don't believe it, and they think it's not possible.
Yeah, nice. So what's the goal now?
This is a really good question. So it's good. Now I realize, like, just because of my age and where I am career-wise, like, I thought cash flow was the most important thing, but I don't need cash flow now, in all honesty. I need cash flow just because it can keep momentum in my portfolio, but I don't actually need it, because the point you're going to need the cash flow is the point where you want to step out of doing what you do. And I'm not there yet. I still want to keep working. So it's not what I thought was the goal is not actually the goal, if that makes sense.
Yeah. But I would say that you wouldn't be able to get to the platform of wherever you want to go without making sure they've got the cash flow to be able to support the borrowing, and so all intertwined. So so now I'm going to say it again. What's the goal?
Yeah. Well, now the goal is to make sure I can continue to move forward, but I can take a different level of risk now. I think bases are covered, so I can take a more long-term approach. Our conversations, we're like, okay, what does this next property look like? You're probably not going to hear me say cash flow. You're probably not going to hear that's going to be the key component. I'm going to say, well, let's have a long-term view. We can play a little bit riskier if that's the case, but let's not put anything in the way that stops us from moving forward if I want to continue to grow the portfolio.
Yeah. Yeah, it's an interesting one, isn't it? Because I like to call that hitting save, hitting save, yes. Right?
Yeah.
And I think everyone needs to focus first on just getting to a point where you can hit save, where you're like, yes. Okay, cool, I've gotten to a platform, and now I'm standing on that platform. And if I did nothing else, if I just stopped, then everything would be sweet. I'm good. I've got all my bases covered. That's what I call hit and save.
Yes. Yeah.
Then once you hit save, then you can be like, well, okay, well, what do we do now? And then you've got optionality and you can choose. And it's interesting you talk about like having that realization. Cash flow is great. Cash flow is important, right? And if you want to be able to, live a life of freedom, choice, and abundance, do all that kind of stuff, you need a way to have a reliable recurring revenue stream.
Yes.
But I'm kind of like you. A lot of people wonder like how I think about it. And I'm like, I want enough cash flow so that I don't get stuck.
Yep.
Right. I want enough cash flow so that I don't get stuck, but I've got no intention of living off the cash flow of my portfolio, right? At the moment, right? No intention of doing that anytime soon. No, that's cool. Okay. So now you want to keep going, but like fast forward, like you're not 50 yet, right? So now like, what does your life goal look like? Because now you're like, okay, now my goal is just to like scale the portfolio and have some fun. Got it. Yeah. Like what about for you? Like, what do you want to achieve? What does success look like?
Yeah, that's interesting. So really for me, I don't look on sort of monetary terms what success looks like, but really it's just about choices really. Like I just want to be in a position where, who knows career-wise, with where I am and what I'm doing, if it no longer makes sense, I don't enjoy doing what I'm doing anymore and I want to exit, or I just want the ability and the choice to be able to make that decision without having to stay somewhere too long that you don't want to be and it no longer makes sense for you, but you're forced to because you really are dependent on that paycheck to keep, to support your lifestyle. Mm. So I like where we've got to now. So, but the next step's really the big question, like where to from here. And it's probably, it's not for you to set my goals for me, but it's really about some guidance here to say, look, here's what the potential looks like. Here's what we can do. And I guess seeing what some of that looks like, what excites me, which direction I really want to go in.
Cool. Yeah, that's fun. That's good. I'm just writing a note that we can have that conversation straight after. So that's all good. Nice one. So, okay, knowing what you know now, if you could go back to your 20-year-old self, right, when you bought that first investment property, go all the way back to 20, what advice would you give yourself? Doesn't have to be related to property, by the way, but just pick that date. If you could go back to when you were 20, what advice would you give to your 20-year-old self?
I mean, at that time, if I just kept doing what I was doing, and I just did it for 3 or 4 years solid, like, probably today we're not having the conversation. I might be sipping pina coladas on the beach somewhere. I mean, that's the reality. If I just even held what I had or just added a few more, then, you're pretty much out of the rat race. However, part of me doesn't like to look back and regret on those things either because I'm enjoying the process now, in all honesty. And I thought, because you look back and you're like, oh, it was much easier then or whatever, but it's possible today. That's the reality right here, right today. Where are we? Sort of April 2022. You can start today. There are places you can buy. You don't need huge amounts of money and you can make it happen. And you can start from not having a lot of capital and just really move forward. So I'm enjoying the process and I want to enjoy it. I like it. It's the money part is stressful. And I mean, trying to gain finance, that part's there's just so much paperwork and hoops you need to jump through, but it's just like a business. You just have to go, you see the challenge, you just need to work out how to get past it with a little bit of strategy. Once you get past it, you just keep moving forward.
Yeah, totally. And it's an interesting thing you pointed out there because as someone who did invest like quite some time ago, not that long ago, you're not that old, but long ago enough, right?
Yeah.
Where like lending conditions were really, really different. And a lot of people do have it in their mind, properties were cheaper and finance was easier and cool. All of that kind of stuff is true, right? Yes. But they also, like I had a conversation with someone the other day who was like 25 and he was into investing in shares and crypto. I said, well, what are you not interested in property? He said, because all properties cost $1 million.
Wow.
And you've bought one for less than 250 grand. You bought another one for less than 400 grand and you bought two in the 600s, right?
Yeah.
Smashing it, right?
Yeah, so, absolutely.
Yeah, but you're right. It is a game of finance with a few houses thrown in the middle. That's the
yeah, it's absolutely that. And you just can't let those thoughts of, it was easier before. Was it easy before? Absolutely. But you can't let that stop you because those times aren't coming back again. Here's the reality. Here's what it looks like today. And we don't know what the future looks like. So today, here's the rules. Here's how to play in those rules and succeed in that time. And if it changes tomorrow, then we look at what tomorrow looks like. I mean,
exactly.
Yeah.
I think that's the value of being rooted in like a principles-based approach, right? Because you need to just go, okay, what does the environment look like now? And how do we, if the destination's the same, what road do we need to take? So, awesome. Sweet, man. Mate, I've really enjoyed this. I think we're to our last question, actually.
Awesome.
So I'm going to ask you now, imagine it's your last day on Earth. Years and years and years and years down the line. You've lived a rich, full existence and you've achieved everything that you wanted to achieve. You got your portfolio nice and spicy. You had a bit of fun. You've ticked all the boxes, everything like that. But for whatever reason, the moment you pass away, everything that you've ever created, achieved, anything is going to be wiped from the face of the earth. But you get to leave behind 3 simple truths. what 3 lessons that you can leave for the world? What three truths or 3 lessons would you leave behind?
Yeah. Well, I mean, I know you asked this question from your other podcast, and it's a hard one to boil down, if in all honesty, but here's my 3. So if you can only develop one skill, let it be sales. Because I think sales skill, you're always going to sell yourself into an opportunity or whatever it is. We're always selling. So I think that's a skill to develop if it's a skill. Understand the power of leverage and compounding. And this is not just about money. This is about energy, time, relationships, skills. So I think those 2, that leverage and compounding is a big part of it. And lastly, I think there's nothing worse in life than the regrets. So I think you just need to get out there and make it happen. Nice.
Mate, I love that. I love all of those. I actually massively agree with all of them. I always enjoy our conversations.
Awesome.
So no, that's good. Are there any kind of final thoughts or any other kind of pieces of wisdom you might want to pass on to the listener? Things that you think they might need to know that I didn't ask?
Possibly the last one. This is the number 4 on my list that didn't quite make it to my 3 truths, but you only have one mum, so you should kiss her every time you see her, because you just never know when the last time you're going to see your mum. So that's my parting comment there.
Okay, nice. That is a good one. And again, very, very apt. So that's awesome. Daniel, mate, I've loved this, and it's been an enjoyable couple of years, and I'm looking forward to many, many more. Thanks so much for coming on the show and sharing your story. Really appreciate it.
Absolute pleasure. Thanks, Goose. Much appreciated.
See you soon. Bye.